Good morning and a warm welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses just like yourself. Don't forget to ask any question in the comments or use the hashtag QBAT, that's QBAT on Twitter. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountant and business experts just like myself are on hand 24/7. Join the live session. We'll also be running a poll, so please do engage with it, and I'll reveal the results at the end. Okay, everyone, so who am I? My name is Aaron Patrick, and it's a pleasure to be with you, especially in the first Ask the Expert of 2021. I'm a chartered accountant, a certified a certified QuickBooks trainer and with a fancy new logo. So don't be afraid to ask me any QuickBooks related questions. I own a state-of-the-art accounting firm called Boffix, which uses the best in cloud technology available to help small businesses get the crucial real-time information they need at their fingertips. If you require any accounting advice, payroll, bookkeeping services, or even QuickBooks online training, then please do not hesitate to get in touch. We don't want small businesses just to survive, but to thrive. I also have a dedicated QuickBooks YouTube channel called Aaron Patrick, the QuickBooks Chap. So if you need any more QuickBooks advice, news, or any tips or tricks, then why not go over and give them a follow. Boffix itself also has a YouTube channel called Boffix Tax Tip, which is another great source of video content for small businesses. Okay, enough about me and let's focus on today's session. As always, this session is all about you and your burning questions. If you have a question, then please do not hesitate to get in touch with any of the social channels and make sure that you get those questions over to us. So while we wait for the first questions to arrive, let's talk about some recent issues that our clients have currently been facing. And as the title suggests, we're talking about Brexit and the tiers. So more importantly in all of that, though, is how is it going to affect your business? The first section is an update with Brexit and how it could affect you as a small business. Now, the biggest impact that could happen between your business is going to be if you deal with importing. So the way that importing used to work has completely changed, and especially the administration side of things. So now that the UK has left the EU, you'll need to account for EU imports directly on your VAT return. And it's a brand new method. So it's really important you understand that this new change is coming your way. The method is commonly known as reverse charge. And as long as you follow the added requirements for customs, then as a VAT registered business, instead of having to pay the import tax at the time, then you'll have the ability to claim them back on the next return. So the big thing about this is the fact that from a cash flow point of view, you're going to be much better off. You'll be able to just declare them on the next return that they fall into. And as long as you keep hold of your really handy monthly statement, then you're going to be able to make use of that cash flow benefit. But the one thing to be aware about, though, is the added compliance. So when it comes to the compliance and the way that the compliance works, QuickBooks has you back on this point. So as long as you fill out your VAT return correctly and you put everything in place, you're going to be in a better position from cash flow. But how can QuickBooks help? Well, what will happen is there's an update that's already come live within the last few weeks, and it makes it really easy for you as a small business to be able to account for these VAT changes. They've added the following new VAT codes to QuickBooks Online, a code called PVA Import VAT 20% and PVA Import VAT 0%. And that PVA is short for post-VAT accounting, which is the new method that's been applied. As long as the transaction is from 1st of January 2021, and it's important that you make sure that the date there is post 1st of January 2021, so anything within this current year, then you'll be able to see that the system itself, so QuickBooks itself, will be accounting for that import VAT and the new way of import VAT automatically for you. You'll need to select one of these new codes, so again, that PVA Import VAT 20% or PVA Import 0%, and then QuickBooks will do the rest. I did a whole video on how this works, including the way that it accounts for it on your VAT return and how you actually put that transaction into QuickBooks, because it's a little bit more tricky than your standard transaction. So have a look over at my QuickBooks channel to see it and see exactly how that works. Well, once this has been put in place, the effect on your VAT return is effectively that you're going to be showing some more output VAT, some more input VAT, so nothing extra for you to pay, which basically means that that import duty that would have been due to be paid and then reclaimed From a cash flow point of view, you're not going to have to pay that at all. So it's great news for small business. And that's going to really impact the way that cash flow is going to affect small businesses in terms of the Brexit. There's also going to be some other elements to talk about as well today. So the other part we were talking about was the impact of the tier system and how that can affect you as a small business. Well, 3/4 of the population of England are now living under new Tier 4 rules, which also require non-essential retailers such as clothing, homeware stores, gyms, hair, beauty salons, and unfortunately more, are going to have to close. But there is help available, and it's similar to the help that's been available throughout the national lockdowns. The government, first of all, have extended the furlough scheme to the end of April, so that's great news and massive relief. Remember that furlough covers 80% of staff wages for hours not worked. So for those people who are looking to claim furlough, we're going to have the ability still all the way till April to be able to claim that, and that's been guaranteed now. Furthermore, businesses which were forced to shut can also claim grants of up to £3,000 a month. However, just as a little personal element to everyone, local authorities are still working through distributing grants from the previous national lockdown. So although you as a business may be entitled to some of these grants, just be aware that from a cash flow point of view, you may find that there's going to be a delay in actually receive them. And that's what we've seen from our clients. They're entitled to them, but the money itself is taking a little bit longer than normal to get through. So make sure that you take advantage of things like the bounce back loans or extension to bounce back loans to cover any gaps that you may have. And it might be the best solution for short-term fix is those bounce back loans, so make sure you utilize them. Also, don't forget the SEISS and the Self-Employed Income Support Scheme has also been extended with 2 further grants covering November 2020 to January 21 and also February 2021 to April 2021. The November to January grant is calculated 80% of the month's average monthly trading profits, paid out in a single instalment and capped at £7,500, exactly in line with furlough. And that's what we've seen throughout the way that this has gone through. So just to recap there then, as a small business in Tier 4, you will be entitled to some grants. And the best thing to do there is to go through to the local authorities, to their websites, and go through claiming them from there. The grants themselves, they're still being paid out, but they are being delayed in those processes. So make sure that you've got yourself some adequate cover in terms of maybe the bounce back loan or something along those lines, and then you should be absolutely fine. Finally, one other bit of news to keep you going throughout this time is going to be with the Vat Deferment. So if your business opted for the Vac Deferment in Q1 of 2020, so if you were one of those companies who didn't pay the VAT return during that period, then originally this was due to be paid in March 2021. So if you hadn't paid in that quarter, originally you had till March 2021 to pay that. Well, the good news is that these are now being eligible for monthly repayments. So there's a new scheme available from HMRC to make it so that those actual repayments can be made in a much more palatable form. The scheme itself isn't open just yet. So one of the advantages or one of the things I would urge you to do is make sure you have access to your VAT portal, as it's going to be that VAT portal where the repayment scheme is going to go live. So make sure as of today that you can access that VAT portal. Sometimes you'll be reliant on your accountant to file your VAT return, and you may not have needed to get those VAT portals or those VAT schemes in before. So at this point, just make sure that you can access your own personal VAT portal. From that VAT portal is where we believe we are going to have the ability to go in and make sure that if you are eligible and you have got the eligibility for those deferments and you have the eligibility to make sure that you can have those monthly repayments, and it's that VAT portal that you're going to be able to go to be able to go and apply for this new scheme. So hopefully that should help some businesses out there, and especially when it comes to the fact that that VAT deferment was a great help in terms of cash flow for small businesses. So what I would also say when it comes to any breaking news that's coming your way and anything to do with how small businesses are going to be affected by the changes with tiers and the rumoured Tier 5 and all the national lockdowns and everything else, is I would urge you to keep watching Ask the Expert on a daily basis. as we'll be keeping you up to date with any further changes or aid available, and then we'll be able to make sure we can answer your questions as well. Speaking of questions, now let's look at your wonderful questions. Remember, if you would like your question answered live on air, then feel free to ask any questions in the comments or use the hashtag QBATE, that's QBATE on Twitter. Okay, so for the first question that's come through, we've got Kirsty from YouTube Live asking, hi Aaron, I'm thinking of moving from sole trader to a registered company. Is there any benefit of waiting until April the 6th, or could I get started sooner? Great question here from Kirsty. So this is a great question, especially when it comes to 2021 and people are now thinking about the fact that their business and how they're going to move their business forward. And we're all making nice plans of how we're going to make the most out of 2021. And one of those questions or one of those elements you might be asking yourself, or you might want to talk about, is the fact, is your business being registered in the correct way? So sole trader is where most businesses will start out for, and then people will migrate over to a limited company. And it's that limited company aspect that Kirsty is asking here, because from their point of view, it might be a case that Kirsty's business will be better off suited as a limited company from tax point of view, from limited amount of exposure, or manner of different reasons why a limited company could be best for them. But one of the questions that gets asked quite a lot is, when is the best time to move over? And the question here is asking, well, should you wait until the end of a tax year to make it nice and clean and tidy from one split to the other, or should you move at any point? And the answer really is that it does depend on certain criteria. So one thing I would always urge, if you're a VAT registered company, to always consider when your VAT quarter is, because that could be a really clean time to move over. But apart from the VAT quarter, the only thing I would always just look out for and think about is just to consider if there's any other factors that might be affecting your business. So do you have any outstanding creditors or anything like that that may be seen as that there might be a reason for you to pay that over? The other thing to consider is if from a personal point of view, you're looking to make any jump into any finances. So you might be looking to take on a mortgage or anything like that. Those are typically the sort of factors that we would consider when it comes to when to move from a sole trader to a limited company. The actual idea of waiting till the end of a tax year has no benefit whatsoever. And normally you'll find that extra time it takes, so the extra 3 months it would take you to get from where we are today until that point, the savings that you could have made from being a limited company will completely outweigh any differences you may have. So what I urge you to do is look in to see if there's anything other of those other factors, so VAT, mortgage, anything like that that could be considered as times that or abilities or parts that might restrict you from moving on sooner. But effectively what I would do is don't wait until a tax return year. The other thing is that you'll also remember that the sooner you do move over, you're going to be able to take advantage of things like less payments on account and all those sort of elements where being a limited company versus sole trader can be much beneficial for you. So normally the sooner that you make that jump, the sooner you move over, the better it's going to be. Plus, as we've just gone into a new tax year, new year, should I say, and we're in 2021, now sounds like a good time to be going through and telling things like your clients and people like that you've made a change, that you've got a new bank account to be paying them into and things like that. So it feels like a good time to utilize the fact that we're in a new year to be able to go in and actually make that adjustment. So my advice to you, as long as you've got none of those other elements there, to get that move done as soon as possible, and don't wait until a tax year to make it through, because you won't have any negatives from waiting for that tax year. We've also got Philippa from Instagram DM asking, how much payment can I expect from local restriction support grant? Does it have anything to do with the rateable value of my store? And that's a great question there from Philippa. So one of these questions is what I talked about in the opening intro, is all about, well, what grants and what support is available to small businesses who have been forced to shut. And just as Philippa said there, it is all to do with your rateable value. So majority of the support out there, especially if we're talking about any of the grants that fall in line with, say, the £10,000 we had at the beginning of the restriction, and anything to do with anything that's related to helping support your business and supporting, more importantly, the actual building and the actual costs related to the building, then all of that sort of calculation is related to your rateable value. Well, that doesn't mean that that's the end of the story, though. So there are other loans and other grants and other opportunities out there at local authority level where you will be able to apply for where it has no bearing on your rateable value as well. And that's the key here, is about looking at all those different options available. The best thing to do, and everyone's going to be different, and every small business is going to have a different way of looking at this, is going to have to go and speak to or look at the local authority website. It's that local authority website where you're going to be able to find the best amount of information and detail relating to your small business. So go to that local authority website, have a look and see what grants and opportunities are available for you. And in there, you're going to have the opportunity to go through and be able to find the one. Another pro tip I would say on this one is don't be afraid to be involved in local communities as well, or even bigger communities like the QuickBooks Facebook group. They're the sort of places where you're going to be able to find like-minded businesses who are going through the same problems that you're going through and going through the same issues that you're going through. And you should be able to find people who are applying for the same grants, applying for the same opportunities and for the same support as well. And if you can find those people as well, you're going to be able to work together in terms of what the requirements are and what information is needed. Each local authority are having different requirements for these grants and different information that's being required. Some are requiring copies of accounts, some are requiring statements to be completed. They're all different in terms of how they're processed and also which grant you're going for. So trying to get as much support as you can is going to be crucial in this sort of thing. And normally you'll find that Facebook groups, things like that, are the best source for people who have already having to gone through that and gone through and been able to get that grant as well. So don't feel alone in this one, Philippa, and hopefully you'll be able to utilize the support around there. Ask the Expert is a great example of that and be able to get those local options and local supports for you. Good luck with that, Philippa. Hopefully it goes well for you. And if you do have any questions, don't forget hello@Bofix if you need anything from us. Reed from Facebook Messenger asks, hi Aaron, could you explain a bit about the repayment of the bounce back loan? It's gone from 6 years to 10 years, so does that mean that the monthly payment reduce? Also, the repayment date starts, I think, in April, but we can do interest only for the first 6 months. Great question here from Reed. So just to give everyone a bit of an insight into what is going and talking about here, this is all about the fact that the bounce back loan, so that loan that was given to small businesses at the beginning of all the lockdowns, has recently had a involvement, has changed the way that it was originally put out. So when it was originally put to us, it was 6 years, and the first year itself was completely interest-free and repayment-free, and then the next 5 years, hence the 6 years, was all going to be on a repayment basis. Now, what's happened with is the fact that the extension to the bounce back loan, so the ability for us to go and get more money if we need to as a top up, and also the fact that the lockdowns have lasted much longer than was originally first perceived, then what we've got is the ability to mold that loan into something that's more palatable for small business. So the ability here is we've got various options. We have the option of taking repayment holidays if we need to, and that's all going to be guaranteed by the government. So it's all backed by the government, so there's no penalties or anything, or less penalties than you'd get from a normal commercial loan. And also you'll find that there is the ability to do repayment only if needed as well. Now, all of these options and everything else is all going to be put down into with whatever provider you've got. So each provider, whoever's provided that loan to you, will have different ways in which you can apply for these or talk about the options and everything else. But effectively, what you need to do is just talk to your provider of that bounce back loan and make sure that they can actually give you the advice on how to apply for any repayment holidays or be able to do interest only or anything like that. But effectively, all of these options are available to all of the bounce back loans out there. It's just you're going to need to talk to your provider about how to actually, from an administration point of view, go and put that through. But yes, if you do opt to extend the loan itself from the 6 years to the 10 years, then you will be looking at a reduced repayment. And remember, the whole beauty of this repayment loan or this bounce back loan is it's supposed to be as restrictive or less restrictive as it possibly can be. So you're going to have the ability to change the way in which you want repayments to be done. You're going to be able to repay early. You're going to have all those sort of elements to it that means that you're not going to actually find yourself going to be restricted or have any penalties along the line. So do make sure you talk to your provider and they'll be able to make sure that you have the ability from there. Chucky from Facebook Messenger asks, I lost a contract last month worth £1,000 a month. I assume this would qualify as a reasonable loss for claiming for the SEISS grant. Thanks in advance. So what Chucky is asking here is basically what does qualify when it comes to reasonable loss, and how is it that from an SEISS grant, so your self-employed income support scheme, what is it that you need to be able to prove to be able to go through and get it? Now, first thing from Chucky's point of view is just to make sure you are eligible. So making sure that you are self-employed and not a limited company. So that's going to be your first criteria. If you've got that and you go through the rest of the eligibility point of view, or if you've already claimed for the first SEIS grant or any of the grants prior to this, that's always a good indication that you are eligible for it. When it comes to reasonable loss, though, that is going to be based purely on how your business is doing. So the question and the criteria is quite vague in terms of what does it mean by what's reasonable loss and what's not. But effectively, if your business has had loss throughout COVID-19 and there is a restriction in how much it should normally be earning, then you will have the ability to claim for it. Now, the one thing to remember, though, is you may have the ability to claim for it now, and I would urge you, especially by the sounds of it, that you definitely have lost out during COVID, and there may be a loss there in terms of your overall income and your profitability for the year. So it does seem to me that you are eligible for it and you should be claiming for that SEISS grant. But just be careful and just be mindful, should I say, that we don't know what's going to happen in the future. There may be some sort of repayment scheme, or there may be some sort of opportunity for HMRC to start claiming back some of these grants later down the line when they assess things like your next tax return or something like that. But for now, the most important thing is getting cash in your hand. So it does make sense to gain that or go for that claim if your business has lost out because of losing that contract itself. So I would urge you to look at claiming for the grant, but just being aware that at some point that may be claim back later down the line, but we don't know for certain exactly how or when or why or anything like that. So for now, I think your best bet is just to get yourself secured for now. We've got Sybil from Twitter DM asking, I was only self-employed for 1 month last year. Do I still have to give them details of my employment for the rest of the year, even though they already have this information? Great question here from Sybil. So what's happening here is we're coming towards the end of a tax year, or we're on the verge of coming towards the end of a tax year, and also the fact that 31st of January is not far away, and 31st of January is your date for filing a tax return. Now, when it comes to eligibility or what you need to be filing for them, then in this case, Sybil, you will have a tax return to complete. So if you're only self-employed for 1 month of a particular tax year, then that makes sure. Now, the one thing to remember is the tax year itself is from March till April. So when you're saying you were self-employed for 1 month last year, do you mean in a calendar year or a tax year? So if it's the case that you were actually self-employed for 1 month of the last tax year, so in your case, it'll be March, the previous March, then just make sure that if you are eligible for that, then make sure that you get yourself registered for HMRC as soon as possible. So what they'll want you to do in your circumstance is they'll want you to complete a tax return where you've got that 1 month of self-employed income you're going to put on the tax return, and then the rest of the year will be whatever other forms of income you've had. So if you're in employment or however it's going to be, so P60s, P45s, them sort of information are also going to be applied. But the most important thing to do is get yourself registered and then get that tax return in. When it comes to how much tax to pay or anything like that, that's kind of negligible, especially if there's only 1 month of a particular income to go. There shouldn't be too much to worry about there. But the importance is that you get a tax return in that bases and shows that you've had that self-employment for that one period, even though it's for only 1 month. So I'd urge you to get yourself registered for self-employed. Really straightforward. Just go to HMRC's website itself, and on there you'll have the opportunity to register for self-employed. And then you've got till the 31st of January to complete a tax return. On my YouTube channels, there are plenty of guides out there on how to complete tax returns. And also, if you're using QuickBooks Self-Employed or QuickBooks Online, there's now really handy QuickBooks self-employed modules, should I say, that will give you opportunity to be able to get the information you need to fill out those tax returns. So use those guides available, use that information. But I think the most important thing for you there is the ability to understand that you do have a requirement to put a tax return in. So make sure then you follow the information to get that tax return done. Maria from Instagram Stories asks, what happens if I close my company before I pay back the bounce back loan? Great question here, Maria. So the issue here is that the bounce back loan itself was not personally guaranteed by a director. So there is opportunities here, or you as a director aren't personally guaranteeing that particular loan. Now, you're going to have to talk to your provider of the loan itself. You're going to have to make sure that you go through the right ways. But the idea is that because you're legitimately closing a business, there's an opportunity there for that loan as well to be written off as well. But you're going to have to talk to your provider of the particular loan. You're going to have to make sure that you go through the right ways through there. And they're going to want to see and want to make sure that that company is legitimately being closed. And that's kind of where the crux of it comes from. Patrice from Twitter DM asks, what is the payment cycle for the local restriction support grant for business tier 4? Is it similar to the previous 14-day cycle? I applied for it in November as well. Do I need to reapply again? So first and foremost here, this 14-day cycle is what is supposed to be eligible for all grants out there. That is the aim. That is what they're aiming for. And the idea then is that if you are a business is being affected by tier 4 and having to close, and there are repayments out there on grants available for you to be able to claim for it. Now, as I said in the opening part of it though, the issue is that although there's this 14-day cycle and it is the ability that you should be able to apply on a month-by-month basis, then there has been, and we have seen that there are cases where those loans and those grants, should I say, haven't been paid out quite on time. So that's why I'm saying that from a cash flow point of view, you should be entitled to the money. So just make sure that you understand that that money should be coming to your business at some point, but I wouldn't put myself or my business under risk, and I wouldn't be reliant on that money coming in as at the dates that they have been going for. So this is where bounce back loans, items like that are really crucial for businesses at this point. Unfortunately, the local authorities are inundated with small businesses looking to get support, and other businesses and other opportunities and other elements that they're looking at the moment. And it's just a case that we need to make sure that we're getting that money into businesses quickly. So bounce back loans and items like that, just to give that cash flow point, but having the foresight to know that that money is on its way. One thing I'd highly recommend for situations like this is using QuickBooks Online and using that cash flow planner that's built directly in it. We've been using that with our small businesses and our clients to make sure that they feel supported and they understand how their next 90-day worth of cash flow is going to be. And with it all being automatic on QuickBooks, this is the exact idea where I would be utilizing that data. So knowing that those grants are coming in, we just don't know when. Knowing that money's coming in, again, we don't know when, but knowing that we may have a shortfall here and a shortfall there. And that's where you can then apply for the right amount of bounce back loan and the right amount of extension to bounce back loan if you need to be able to keep your business supported. And that's pretty much it for the first day or first of QuickBooks of Ask the Expert of 2021. So thank you for all those wonderful questions. So really varied questions there and some great ones for us to look at. As I said at the beginning of today, we had a poll that was running through and we were asking you a really simple question. Are you optimistic with your business growth in 2021? And the poll results have come in, and this is a brilliant answer here. The answer here is 100% of you said yes. So that's a great start to the year. And hopefully that's exactly how we should all be optimistic about 2021. The ability that we got the opportunity to grow from 2020 and use the opportunity to see as 2020 as a baseline and be able to move our company and our businesses forward in 2021. So great to see such a fantastic result there. And thank you all for tuning in this morning. It's been a great session of Ask the Expert. If you need to get in contact with me at all, you can contact me on hello@boffix.com. That's hello@boffix.com. And any of us at Boffix will be more than happy to answer any of your questions that you may have. Coming up on Ask the Expert tomorrow is Lee McQueen, former apprentice winner and the founder and CEO of Phoenix 51, a powerful employee technology that enables organizations to make data-driven decisions through every stage of their employee journey. And I think how important that is for any small business out there who's had to have employees on. You know how crucial it is to make the decisions at the right time. So I'm really excited for Lee to be coming on tomorrow, and I'm definitely going to have some questions for him I'm going to be sending over. So remember, if you have any questions that you want, or you've got any more advice, then join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts just like myself are on hand 24/7 to answer your questions. A massive thank you for today for tuning in, and I will see you in the next video. Bye for now.